For the record, my name is Brian Worrell, District 4 City Councilor, and I am the chair of the Boston City Council Committee on Ways and Means. Today is October 1st, 2024. This hearing is being recorded, is also being live streamed at boston.gov/city-council-tv and broadcast on Xfinity Channel 8, RCN Channel 82, and Fios Channel 964. Written comments may be sent to the committee email at ccc.wm@boston.gov and will be made part of the record and available to all councilors. Public testimony will be taken at the end of this hearing. Individuals will be called on in the order in which they signed up and will have 2 minutes to testify. If you are interested in testifying in person, please add your name to the sign-up sheet near the entrance of the chamber. If you are looking to testify virtually, please email our Central Staff Liaison, Karishma Kahuna at karishma.cho, I'll spell out the whole name, KARISHMAA .CHOUHAAN@boston.gov for the link, and your name will be added to the list. Today's hearing is on docket number 1002, order for a hearing to create a Boston Development Fund in the Planning Department. This matter was sponsored by Councilors Brian Worrell, Julie Mejia, and Tanya Fernandez-Anderson, and referred to the committee on June 12, 2024. Today, I'm joined by my colleagues in order of arrival: Council President Louis Jen, Councilor Pepin, and Councilor Braden. I would like to now introduce today's panelists. We have with us Interim Chief of Planning, Devin Cork, Administrator of the Boston Housing Authority, Kenzie Bach, BPDA Senior Policy Advisor, Ruben Cantor, and Founder and CEO of RISE, Jim Grossman. I'm going to give a few brief opening remarks, and I also have a little presentation that I'll pass out to councilors. I introduced this hearing order in June, shortly after the city announced its $512 million free cash balance. And as I was hearing from many corners of the city that development in Boston had stalled. That's something that we can see with our own eyes every day. We once had dozens of cranes dotting the Boston skyline. Now there are a few scattered. As you can tell from the hearing order, the original idea for a revenue fund was to use some of our free cash to create a revenue for the city while also sparking the approved but unbuilt inventory. We have nearly 30,000 units of housing that have been approved by the BPDA and have not yet been constructed. But what I saw when I looked further into those units, that we not only have a production issue in Boston, but with 25,000 of the 30,000 units planned to be apartments, we're going to be exacerbating the renter-owner divide even further in this city if these approved units get built. Simply put, we have a production and a planning issue in the city of Boston. And so this proposed fund tries to solve for both. Let me take you through the slides that have been printed out for you. We all know that the city and state, and really the country, is facing a housing crisis. This impacts not only generational wealth, but at the most basic level, it hurts community stability and our unhoused population. Many of the reasons behind this include high interest rates and high cost of construction. But there's also perception among the prospective investors that Boston is a tough place to do development right now. And so there's a financing gap here that isn't felt in many other cities. If you go to the third page, you can see a chart of the unbuilt inventory, which is broken down by project size, as well as apartments versus condos. This only accounts for BPDA-approved projects. So you're looking at 15 units or more in these projects. There's a healthy amount of income-restricted units, which is great to see. But what is troubling is the lack of home ownership opportunities. Nearly all of these preservation units are apartments. So you're looking at about 10% of the pipeline as home ownership. And finally, number 3 on this page details how building more units can help ease the residential tax crunch, as you'll be spreading the burden over, say, 230,000 units rather than 200,000 units. On page 4, you can see details of the revolving fund. I believe that $150 million is the right number, as it would leave the city with about a month's worth of operating budget and free cash. Page 5 lays out the guidelines for the fund. We'd like to set up multiple models for developers, as we know that each deal is unique and we can't do a one-size-fits-all. We know the Momentum Fund at the state has passed, and so we can mirror something like that, but it doesn't move a ton of production on its own for the amount of money that you invest. And so we set up some models where the city can opt out at different points along the way or stay in for long terms as an equity holder. As you'll see, we're putting a major emphasis on home ownership. We all know it's the best and fastest way to build wealth in the country. It's also an incredible anti-displacement tool, because when the value of a neighborhood rises, so does the value of your condo. And ultimately, home ownership can bridge the gap in income disparities. But if we have fewer home ownership opportunities, then that wealth disparity gap is only going to grow. On page 7, we set out our city's housing values. And this is something that we've heard from counselors across various different hearings and working sessions. And these are just a few, and we're happy to add to this, but affordability, home ownership, family-friendly units, coastal resilience, and for the developers and construction teams following the BRJP and Massport model of inclusion, which will help us attract and grow emerging developers. Now we'll go to the options, and not all these options are still work in progresses, but these are models that we have worked with different developers on. On option A, we're investing in a 100-unit wood frame apartment project. And what we're going to do is turning the IDP and maybe up to 25% into affordable condos as part of our stipulation to get involved into the project. And you could get this up however you like on the back end. But we have a couple of examples of how this has worked at Morton Station Village. Shout out to Donna Alexis and team over there, and also at Parcel P12C in Chinatown. And we have a couple developers here who will speak to that further in detail about it. Option B looks at the city investing into a larger apartment project with the stipulation of turning it into all condos. The caveat here is we often hear it's hard for developers to sell all those condos units at once. So we are offering a tax break for the first 3 years to any unsold units, so the developer doesn't have to pay property taxes on units until it is sold. Option C is the same concept as option B, but at a smaller level, and thus without the need for the tax break. And option D, we had a whole hearing on this yesterday, but it's about raising the building on the city parcels and entering into a 100-year land lease on that property, so it generates revenue over time, similar to what Massport does with a lot of land on the Massport model. In option E, I believe the city's already looking into this, which is moving a lot of BHA mixed income projects along in Charlestown and South Boston. And as you can see on the final page, we've begun to solve for all 3 of the issues facing the city. We'll get shovels in the ground on thousands of units in the pipeline. We'll ensure that more opportunities for home ownership, and ultimately, we're really solving for a long-term residential property tax crunch. And with that, I'll start with Jim Grossman. And Jim Grossman, happy to have you here. You can explain a little bit more about option A, which we modeled with you.
Yeah, absolutely. Thank you for the time. Thank you, counselors. By way of background, I am a principal at Rise Together. We are a minority-owned development firm based here in Boston. I'm a lifelong Boston resident, currently live in Dorchester, so I commend everyone for working on this solution. Housing is obviously a dire need for all of us, and kudos to a keen eye on home ownership. So our primary market is this below 99 units as a development firm, and we were asked by Councilor Worrell's team to run the financial models on these scenarios. And what we were trying to find was what are the diastolic pressures within that financial model given the current state of the capital markets, high interest rates, where construction costs are, and then what is the viability of those? And so with each one of these, we had a third-party organization validate our financial models to find out that they are viable and they work. And so at a 100-unit apartment, we modeled the 25% of the IDP at a forced sale. So making those condominiums and the remaining 75 units being a rental. What we found was it passed the litmus test of required return on cost to get bank financing along with an equity investor. But there were also logistical challenges that need to be worked out. Where do those condos reside within the proximity? So logistics becomes a challenge. And then what are the legal ramifications from having a condominium? And I think, the relevant projects that have worked in the city are a great conclusion to show that these are viable and they do work. But as we started to talk to the capital markets and people in the marketplace, those were some of the challenges that were coming back. So we can say from a financial perspective, given the current state of construction costs, the current state of land costs, and the current state of the capital markets mostly being borrowing rates, that this option A is financially viable and feasible.
Thank you. I just want to acknowledge that Council Fitzgerald and Council Mejia has joined us, and also Council Durkin. Now I'll go to Devin for any remarks.
I'm fighting with it there. Thank you, Chair. Happy to be here. Thank you for holding this hearing on an important subject. For the record, I'm Devin Quirk, Interim Chief of the Planning Department, and joined by Minister Bach, who will speak in a moment from the BHA's perspective, and Ruben Kantor is our Senior Policy Advisor. And just a big thank you to Jim for joining this panel as well. He's been an excellent partner of ours and the whole team at Rise Construction as we work to try and get housing units into construction in our city. Just a couple of quick opening statements. I wanted to start by saying we are here in the context of an announcement the mayor made last week at the Chamber of Commerce annual breakfast. She announced that the city intends to work with this council to create a housing accelerator fund to invest up to $100 million from the city's free cash balance to create much needed housing in our city, much like the chair just mentioned. This policy idea is targeted to the economic moment we find ourselves in the city today. We know we have significant barriers to housing construction, such as the costs for materials, labor, land, and interest rates, which are all experiencing record highs. These cost increases have depressed housing starts, and while we've seen a modest bounce this year, we still have a lot to do to produce the housing that our city needs. As market conditions thaw, we believe it is now feasible for the city to step in and strategically close the gap, financing some projects to actually help catalyze housing in our city. The intention is to build upon Governor Healy's recently approved Momentum Fund that was included in the latest housing bond bill this year and will be administered by Mass Housing. Boston's Housing Accelerator Fund is modeled after that state program and other similar funds that we found used in a small number of but very impactful localities around the country, which involve investing low-cost equity into projects in order to ease financial barriers and start construction. And Minister Bach knows these programs well, and I expect we'll talk about it more momentarily. But one thing I wanted to underline from the very start is that it's important that we say that these are not subsidy programs. The program that we are envisioning invests in market rate housing construction and therefore expects a return that the city can see in future years and then either choose to reinvest in future projects or return to the general fund, unlike affordable housing subsidies, which are expended into projects. We're very confident at this moment in time, and Mr. Bach will speak to this, that the impressive work that the BHA is doing in public-private partnerships would see a benefit from this type of public-private partnership and equity model. And we're actively exploring with private developers whether this type of investment paired with the state's Momentum Fund would actually help tip the scales to get market rate projects into construction. So we're very excited to have the support of this council and our mission together to ensure that we can build homes, bring rents down for our residents, and ease displacement pressures in Boston. And we look forward to discussing these solutions with you. I'll turn it over to Kenzie.
Thank you so much, and thank you, Mr. Chair and councilors. Yeah, I thought I would just speak a little bit to how we've come to this moment from a BHA perspective. So as councilors here know, the BHA launched major public-private partnerships in both South Boston and Charlestown and pursued permitting for a major increase in density at both sites. So going from at Charlestown 1,100 units to 2,700, and South Boston from 1,000 units to 3,200, and in both cases a situation where we would replace every deeply affordable public housing unit with a voucher-based unit for the same residents, and then add the additional units as market. Now, and both of those permitted plans involve a few buildings that are all affordable, both because building one of those first helps us with the relocation challenge and keeping everybody on site, and then also because there's an interest in having dedicated buildings for our seniors and disabled population so that we can have services and amenities dedicated for them in those buildings. But the majority of the buildings in both sites that have been permitted are mixed income buildings. In Charlestown, 78% market, 22% the replacement units. In South Boston, 80% market, 20% the replacement units. Now, ironically, when this permitting was originally done, the theory was that the capital markets would take care of the financing of the majority market buildings, and so that we would be dealing with the subsidy, the affordable housing subsidy world for the all affordable buildings, but that we'd have a kind of market-based engine for making these mixed income buildings go. Unfortunately, then interest rates rose. Everyone knows the story. You've heard it a bit from other panelists. And so ironically, that has also become the BHA's problem in terms of how we move these transformational projects forward. And that's, it's something that is very distressing to our residents. I meet regularly with both the Mary Ellen McCormick Tenant Task Force and the Charlestown Tenant Task Force. In the case of Mary Ellen, we are just about to close this year on the first building, but it's all affordable, so it hasn't been set back by this yet in the same way. But in Charlestown, the first building is actually going to be completed this year, and the second building that's supposed to, ideally we would have already broken ground on, is one of these mixed income buildings. So this has meant that the BHA and our residents are very invested in the question of how do we get the engine of mixed income buildings to go, like everyone else is. But of course, what we're not interested in doing is pouring public subsidy into these buildings so that the private side can make a very high return that they want. We don't think that that's a reasonable expenditure of city funds. But what we've been really interested in, and I know I spoke at another council hearing at length about this, so I'm not going to do so today, but the Montgomery County model that HOC down there has been running, where basically they stepped in to replace the real estate investment trust capital market sort of slice of the pie. And so you're still investing like an equity investor, but the return that you're demanding is less than what the equity investor would demand. And so it kind of gives us a public engine for making these projects go. We're also very interested because part of what that has enabled HOC to do down in Maryland is to increase the affordability somewhat. So for instance, there's been a long-term interest since we started these projects in whether we could add a middle income tranche. And we think potentially, which some folks here know, ironically, middle income units are the hardest ones for us to finance, unexpectedly so, but because the federal government gives us such substantial subsidies for the deeply affordable units, it's really the middle income ones are the hardest to make pencil. So, our real interest here is in using this first mixed income building at Charlestown to pilot this investment fund and both get the building moving, but also be able to somewhat improve the affordability mix, and have a situation where we're doing that and the money is coming back to the city and to the public for continued use. We think it's really a win-win-win. We're really excited about it. I know actually several of my residents on the Bunker Hill Tenant Task Force were reading the New York Times stuff about Maryland and bringing it to my attention saying, hey, could we do this? Because like I said, nobody wants to see the project there stall. And so, we think it's that nice combination of innovative and also dovetailing on something that has been done and that works. And I should say also that we're very fortunate in that in Maryland, the housing authority that's doing this is also a housing finance agency. It's the only one in the country that combines both. But there are probably 2 housing finance agencies in the country that are the strongest at some of the complementary financing and underwriting that you need to do this model. One of them is this one in Maryland, and one of them is Mass Housing, our close partner that we work with here at BHA. on lots of projects. So what's exciting for us is that there's an opportunity to piggyback on Mass Housing's underwriting capabilities and the Momentum Fund, and kind of have them bring some of that expertise to the table so that, again, we know that the city dollars, public dollars, will be well safeguarded. So that's just a little bit of context about sort of how we got here and why we're so excited about this announcement. I should just say at the outset that because the nature of this now will be a negotiation, right, to figure out like exactly what's the minimum amount of money that's needed to make each of these projects go. And at BHA, we have, more than 15 of these mixed income buildings permitted between the two sites. So because of that, we're not going to commit up front to this is the number that's going into that first building at Charlestown, because we really need to negotiate so that that number is as low as possible. So I can't, from a sort of public interest perspective, put a number on the table that then sets a kind of floor for where we might end up with that deal. So I just wanted to flag that off like from the beginning. And I would say that just, obviously we're thrilled to be here talking about this less than a week since the mayor made her announcement. We do expect to come back to the council with a proper appropriation order and be able to speak to some of the more details then as well. But just Mr. Chair, thanks so much for having us.
Thank you. I just want to acknowledge that Councilor Flynn has also joined us. Now I'll turn it over to my council colleagues in order of arrival for any questions, starting with Council President Louis J.
Thank you, Mr. Chair. Thank you for this hearing order. Some advantages to being the chair of Ways and Means. You've been talking about free cash for quite some time, so excited to have a hearing on your hearing order and seeing how it marries with the mayor's accelerator proposal. I want to thank this panel for your expertise in the work that you're doing across the city. I actually have some more general questions. I think perhaps Devin and Jim would probably be the most appropriate to answer. When you're developing an affordable housing unit, whether it's and you have an affordable home ownership opportunity versus an affordable rental opportunity, which one is more profitable and more attractive to a developer? Oh, and Ruben too, if you want to. I mean, and Kenzie too. I mean, everyone, if anybody wants to. But I just the developer on the panel. So
from an affordable housing for sale product, these are well publicized. The Boston Globe had a great article on. It's approximately around $600,000 per unit to build in our marketplace here.
$620,000.
Correct, $1,000 to build a housing unit. And again, Councilor Worrell mentioned it. Every project is unique, and that is the challenge I think for everyone that works in the policy world is how do you create a policy that takes into that account that uniqueness. And so that may vary somewhere between $500,000 to $600,000 per unit. When you look at an AM,
and those numbers are the same, so that development cost is the same whether you're developing like it as a condo or as a rental unit.
Generally, yes.
Generally.
Yep. So directionally, absolutely. And then density type. If it's a high rise, you tend to be on the high side of that scale. If you're a wood frame mid-rise, you tend to be on the lower side of that scale just because of the materiality of the project. And so when we think about focusing on those and finding an area of profitability, the reality is based upon AMI, you're always less than that cost to build. And so your market rate subsidizes the fact that you are now either selling and or renting for a below cost unit turned over, and that goes through the BPDA process and the affordability process here in Boston. And so that from a profitability perspective, they each one of those, whether for sale or for rent, they tend to land on that same scale. The reality is this in the marketplace. It really comes down to financing, and we did on one of our projects have this same conversation at the BPDA board, where larger projects are very hard to finance when they're for sale. And that is just because the way the capital works in the private markets is you get less debt on a condominium project, on a for sale project in the private marketplace, because it's seen as more risky. That capital is seen as more risky. And so where on an apartment building, you can get up to 70% of the cost in the form of debt, somewhere between that 60 and 70%. On a condominium project, you'll be in that 50% range, which means now you have to go find more expensive capital to complete the stack in equity. That is just a more expensive source of capital. So that is what I think is the restriction on for sale, is the way the capital markets work, much less than, call it the numbers, if you will, behind that pro forma. It's more around capital sources that make it more expensive on the for sale side. I think it's a very innovative thought process to say, can we mix those two? Can we leave 75% of these units as for rent, which make them more viable from a financing perspective, and de-risk, because there'll be fewer for sale units, I think is a very smart approach, and did work out in our modeling of it, our financial modeling of it. Hopefully that answered the question.
That does. It identified, because I know I've had these conversations with developers, and there is a skew towards rental, and you articulated exactly why that skew exists. And it just makes me return to us as legislators to figure out, then understanding that reluctance and that imbalance because of things that are all market-based, right? Things that are beyond our control as government actors. Where and what should we be doing, if we should be doing anything to sort of tip the scale or to intervene in a way that the market won't. So I appreciate that answer, and I see, Devin.
If I can just jump in and add one more thing, which is, I think your question was about affordable housing specifically. I think we're speaking about market rate housing too.
But I understand the way that he answered it, and I understand why he answered it the way he did.
Yeah, and one thing I think it's important for us to, important perspective to bring is that we're one of the few cities in America that is actually funding affordable homeownership opportunities, and the reason for that is that the federal government does not fund that. There aren't major sources of subsidy capital that exist for us to be able to pull into affordable homeownership, which means a lot more of the dollars have to be local dollars. The state does have some programs for this, and the city's been in Mayor's Office of Housing under Sheila's leadership. Chief Dillon's leadership has been significantly investing in homeownership opportunities, but it's something that there are just very few municipalities in the country that are doing it, because of the lack of capital to do so at scale on the federal level. So something we should certainly look to do more of, and I think we're in the reasons why we're here, but also probably important for us to realize that when we're doing rental housing, whether it's, and we're putting city dollars, whether in market or affordable, it's going to stretch further because there are other sources of capital that we can pull in from the state and federal level. So we might get more housing for our local dollar if we're investing in rental. In the rental market. Yeah. Understood. Federal government block grants within the purview of municipalities to decide how they're allocating the resources to a certain extent have been used for home ownership. That I don't know if Mr. Bach knows the answer to that question. I'm not sure if I suspect CDBG dollars can be used for home ownership, but I don't know for sure. That's probably a Mayor's Office of Housing question.
Okay. Can I just say one more thing? So just a couple more notes on just to expand on his point about why it's perceived by the markets as riskier. I mean, I would say it is riskier, like to build a large home ownership program than to build a large rental project. And the reason, just so folks understand, is because a rental project, its value is price based on its net operating income, right, after expenses, and that's based on the rents you command. Now, if you got your estimates wrong, it turns out it's a weaker year than you expected, it's 2020, right, in COVID, then your operating income's dipping for a year, but it can easily recover. The rental market can recover, and NOI values are based on long-term projections. So if there's one weird year, or for some reason you have a fire and you need to empty 10 units, and so they're vacant for 12 months, that can be a blip in the NOI calculations for a large project. With home ownership, if you finance it, if the bank lets you take out a loan and you get your equity investors all based on the assumption that you're going to sell at a certain price, and then it turns out that the market is softer when you go to sell, either because of market conditions or maybe you misguessed how people would like your location or the quality of your product, right, whatever reasons, it's one and done. So say you said, oh, I'm going to sell these units for $800,000 a pop, and you only sell them for $750 a pop, you have no way of recovering that money, and all your investors eat the loss. So that's what's going on with the perception that homeownership is riskier. It has to do with the fact that you have this one and done moment for realizing the value versus rental can absorb a lot more shocks and changes in circumstance.
Thank you. Mr. Chair, is my time up?
Yes, your time
Okay,
is up.
I will reserve my questions for second round. Thank you.
Awesome. Council Braden, the floor is yours.
Thank you. So you've talked a little bit about like BHA projects. I'm Alston Brighton District 9 has a lot of permitted projects that are not permitted. They're approved projects by the BPDA, but they're sitting, some of them have been sitting for 10 years. How do you see this? Do the developers, how do you approach developers to offer this program, or do they have to come to you? I'm just thinking in terms of, because we would love to see some of that inventory actually get built, especially anything that's a condo project, because our home ownership levels are so low in Alston Brighton. So any thoughts on that?
Yeah,
I know we've talked about this
yeah,
before.
absolutely. I mean, I think you're nailing the problem statement, Councillor. There are well over 20,000 units of approved, BPDA board approved housing that are not in construction across the city. And it's not local factors that are causing those to not move into construction, right? They're broader capital market issues, cost issues, the things that we've lined out in the panel here, but we can be part of the solution. We probably can't fund our way to 20,000 units of construction, but in this moment where interest rates are starting to improve, and but we know there's just not quite enough to tip the scales to make a project financeable and start construction today. Or our concept, working closely with Kenzie, is to have a product that lowers the cost of capital, takes instead of going out to the capital markets and getting an equity that expects a 15% return, say the city expects a 3% return. Now that totally changes the numbers. That wouldn't have worked if the gap is massive. That's not going to help you. But if the gap is incremental, then it's going to get a project in construction. And I said in the opening statement, the idea behind these are market rate projects we're talking about. So we're not saying we're going to grant dollars to these investors. We want to be an investor too. This is housing that will produce tax dollars in our city, that will house individuals in our cities. There's a reason why we want to see this happen, and maybe we'll take a lower return, but we want to get our money back because this is market rate investment. This isn't affordable housing, and then that money comes back to our general funding and can get, like I said, can be reinvested in future projects or be reinvested in any priority of the councilors of the administrations in the future when it returns. So in terms of how would you apply, well, I think that's why we're starting with the BHA projects, where it's very clear that there's an ownership stake in the public sector, and there's an existing partnership already. We know that type of model will absolutely work. The state's announced a momentum fund. They'll have out an application probably later this month to enter into a competitive round of financing. And we'd like to see those dollars go first. Those aren't our dollars. Those state dollars. They're targeting the same issue. If the state's dollars are enough to move projects into construction, great. We should focus our dollars on BHA public-private partnerships. But we are going to be looking at it on a project-by-project basis, whether some of the projects in your district or in other districts, after they've already have the full momentum fund award, if they need incrementally more to actually get into construction in the next 12 months. That's what we want to underwrite and determine if our dollar will actually get them there, in which case we'd like to recommend that potentially that we'd invest in that project.
How many units do you foresee, like in the first year, that we'll be able to move, like move forward?
I mean, I think that it's a little bit of a harder question to answer. I will say that the building that we are trying to move in Charlestown is a 265 unit building. And one of the reasons why it's such a good first candidate for us is that it's completely designed and permitted, like everything, it's like ready to go, right? So, but that's 265 units. I think that the thing about how many units we can move in the model with private partnership, the thing is it really depends on, like, we want to underwrite these for the minimum possible per unit. So for instance, like it might be that the state is in, as Devin was just saying, for the maximum that the Momentum Fund will put in a project. And we find that there's actually a relatively small amount more of like favorable financing from the city that's needed. And so you can imagine like those numbers would get skewed if there was a 300 unit building that the city only needed to put 3 million into because of what the state had already put in, right? Then it would be like, we'd start doing quite a lot with a fund of this size versus if the city's the only partner in, or if, for instance, we're putting a little bit more in order to drive what I mentioned before, like a little bit more affordability or getting some mix. So it's just, that's why it's a little bit like how long is a piece of string in terms of exactly how many. But, you know, I think we're definitely, you know, I think we would love to be at 1,000 or more, you know, like I think is the sort of the feeling, but I think we also don't want to, this is really a but-for program. It's envisioned as like money that makes a project that is not going go. So our concern about getting folks not to think about it like a subsidy program is like we don't want developers and other folks out in the world thinking, oh, okay, I can just count on this amount from this fund. Like it needs to really be that like they work with our team, that we're working with the state, that we're really looking at like what does this actually need to move.
Yeah. I think as well that the whole issue about middle income units and so you call them market rate, does that include a spread of affordability within the market rate group as well?
Program criteria.
A couple things. On the Momentum Fund does have a requirement of 20% affordability. But for the market rate units, there's no income requirement on the market rate units. For the Momentum Fund, we've done our analysis and we're working closely with the state, and we've been calling around to a number of developers to see which of them have projects that this would work for. We're estimating about $50,000 per unit of investment would be eligible from the Momentum Fund. So all told, based on what we think would come to the city, we're probably talking about between 500 and 1,000 units just from the Momentum Fund side, from the state. That's all rental projects that are 20% or higher IDP. And there's a lot of interest, including from our friend Jim here, for this particular fund. But we've definitely been reaching out to a number of folks also in Allston-Brighton and in all districts to try to find developers who would be interested in taking this up, and we're introducing them to the state to make that connection as they get prepared to make their announcement.
Very good. How am I doing for time?
Yeah, time's up, Councilor
Time's up.
Braden.
Thank you.
Thank you. Councilor Fitzgerald, the floor is yours.
Thank you, Chair, and thank you, panel, for being here. I've had all my old bosses in front of me this week. This is fantastic. So I like this idea of being equity players in development, right? Because plenty of people have made money off our city. About time we start doing the same, and that's a great thing, to be able to borrow at a lesser rate, require a lower rate of return, to produce more affordable housing, not just housing. It all sounds like a very positive thing. Question, and Kenzie, you may have just mentioned this, sorry, Superintendent Bach, but are we only the last mile, like bridge financing here? And at what point does the developer come into the process to say, this is what we've done without you, and now we are finally coming in front of you, and here's our scenario where we need you? Or is it, do you work with them from the beginning? To your point of like, we don't want to be the tool from the get-go. So at what point do they enter, and what qualifies them to maybe be helped?
Yeah, so I'll let Devin answer that for kind of the general folks. I think, again, it's a special case. In the case of the Charlestown and Mary Ellen projects, we obviously have an established partner there. Yep. And honestly, we work like as a team on how we move things forward. So like at the Bunker Hill parcel, we've been running financing models on the first mixed income building there for the last 2 years, because we've been trying to be like, okay, well, what if we combine this source? Could we, right? Because we're all very aligned in wanting that to go. So I think that now that the city comes in, there's obviously a negotiation component with the developer because we have an existing development agreement, right? So that's a process that has to play out. And again, that I don't want to kind of...
How about aside from those two, though? So new project somewhere else, not at BHA, just...
So I'll let Devin speak to that.
So, I mean,
thank you, Kenzie. I apologize.
No problem.
Yeah.
I guess the Place to start, Counselor, is there's a reason why we're saying we'd like to look at BHA first, is because we already have those existing partnerships, and we have them from the start. So it might be that if we're investing city capital, that the best place for it to go is just into BHA projects where we already have these public-private partnerships. But if there is an opportunity, to answer your question, where would we go in the private sector? Readiness has to be a number one criteria. We would only want to invest in projects that in return for getting our funding would be willing to start construction, say, in a 12-month timeframe. But that would be a condition of award. It would be one of the competitive criteria on which we're envisioning utilizing Mass Housing's underwriting capability. And both us and them would say, hey, we don't want this money sitting in a bank account. We want this money going into a project now to start construction now. That is the thesis by which we're willing to make this investment. So having a date certain for construction start with this additional dollar is what we'd be seeking in those discussions.
So they'd be through Article 80, they'd be through,
Yeah,
they'd have all permits in hand or
Exactly.
about to be in hand.
About ready to issue. It certainly already has to be approved,
Yeah.
Resolved other issues. Yeah, and Ruben mentioned this earlier, but it's probably important. Mass Housing's statutory requirements, if we're going to leverage their dollars, require a project to be 20% affordable.
Yep.
And so we would really be only looking at the universe of projects. There's a good number of projects in Boston that are already 20% or above, and there's a good number that are at 17 to 19 that could probably add a few affordable units in order to access this low-cost capital.
Thank you. That was actually going to my next question. Do we have specific projects identified already, and do we know how many units that would produce and where they are?
Yeah, so we have developers we've been talking to and conversations we're having. We haven't got to these are the projects we want to fund. That's the next phase of work.
Last two questions. Just a quick answer. The definition of deeply affordable. We were saying deeply affordable a lot. Deeply affordable. Is there a definition behind that?
Yeah, so I'll say that I think I was saying that, and that's in relationship to these replacement units at the BHA site. So we tend to characterize them as deeply affordable just to flag for folks that those are replacement public housing units. Okay. So they're project-based voucher units. Some people would describe them as 30% AMI units, but the truth is that the folks who we house, our BHA families, are on average at 17% AMI. Gotcha. So they're serving the extremely, extremely low income folks. What's interesting though is that because they come backed with a federal subsidy, yep, they actually are easier to finance than an IDP unit that serves a
middle class,
middle
right,
income person. Yeah.
What happens if we do not see the return for some unforeseen reason? Right. This is our last bridge, and this is intended to be a revolving fund. Some catastrophic incident happens, or just the market, or just the projects themselves don't happen. What happens on the city side? And do we just chalk it up, or do we just eat the loss and say, just like a private investor would if they were financing?
Maybe I should take that. Thanks. So I've had a lot of conversations with Mass Housing about their underwriting practice, just to talk about the risk that you're talking about, and we believe we're in a place where there's very, very little risk, because Mass Housing has $8 billion of loan and equity investments out there already. They have really deep experience in underwriting, and through the Momentum Fund, we're also pairing this with a senior debt product through Freddie Mac. So there's actually 2 layers of underwriting to begin with that are really important. And so then the other piece is that because of the structure of this fund, the city would be getting its money back before the investors and before the developer. So there's really...
Is that where we are on the waterfall?
That's where we're in the
number
waterfall.
1?
Yeah. So it's a pretty strong position
right,
for us, and so I think that's why we feel like this is such a great place for us to be in a good program.
I know that's time, but a very short, quick answer, Jim. You said that a big part of this is condos and for sales are more risky capital in the market. Why? Is it just the way it's structured? You said that's the reason, but what is the reason that is the way it is?
I think it's exactly as Mackenzie put it. It's more susceptible to market volatility. So in the world of an apartment, your investment might be over 7 years, and you can absorb market volatility. In a condominium, you're stuck in that time frame.
Yeah, she did answer. Yeah, you're right. Thank you very much. Thank you, Chair.
Thank you. Councilman Mejia, the floor is yours.
Thank you. Thank you guys for being here. Good to see you. So I always like to understand the process, especially for those folks who are not as privileged to understand all of the stuff that we've heard here today. Can you just, in a very simple way, explain to us kind of what are the wins? Who are the beneficiaries? Who will benefit from this?
Yeah, I mean, a great place to start, I think, is Boston writ large. I think we all agree that housing costs are too expensive in our city, and we should be doing everything we can to bring them down. And adding housing in our city is one extremely important way to do that. Supply is not the only answer. There's lots of other things we should be working on, but today's hearing is really focused on the supply market side of housing costs and getting projects that we've approved, that have been through a lengthy community review process, and that led to a successful board vote. And so at this point, the city has endorsed them moving forward, but they're not able to start construction because the developer, the private developer.
Help me understand where the developers, are they Boston-based developers? Are they developers of color, women-owned? When you say developers,
yeah.
who is, I guess what I'm trying to get at is always who is going to benefit from this the most. We talk a lot about racial equity, so I'm just trying to understand and gain some insight in terms of how this will help close the racial wealth gap that we keep talking about in terms of benefit, not just for housing purposes and building it, but like the long-term goal of reaching our equity goals. That's what I want to get at.
Gotcha. In terms of taking an equity lens to this investment, and say there's probably two places to go. Who in the development community are we working with that are the businesses making money associated with housing construction? That's been a long-term viewpoint of ours from how we award city land, for example. We have long had what Councilor Royal referred to as the Massport model, but I really think the City of Boston model is taking that to the next level of requiring that across all phases of construction, pre-development, the actual people doing the work of construction, and the tenants and owners that take a resident in the development after the fact. That's how we look at public property investment. We are, in terms of this investment, I think we want to have that same type of equity lens, but we haven't written those program criteria yet, so it's something we'll be working on. Happy to discuss with you as you go. So that's the sort of who benefits from the investment side, and then the who benefits on the, because we're producing housing. I think that's a very broad base of all Bostonians. All Bostonians suffer from extreme housing costs, but disproportionately lower income communities of color are facing greater displacement risk in our community because of the cost of housing. And so doing everything we can to keep those communities here is part of why we need to make this investment.
And if I can say one thing, Councilor, I think that for the BHA families who live in these two, Charlestown was started in 1941 and Mary Ellen in 1938, so they're very old bricks. I know, we really struggle with the amount of investment and maintenance that these buildings need. And so for me, when we talk about, giving people new homes on those sites, every year makes a difference, because we've got people sitting in a building being like, when am I going to get something new? And for me, it's been very frustrating that the progress on those BHA replacement units is being stalled by this boom bust real estate market, right? And the fact that the reason that projects aren't going is because there's a bunch of, we're talking about the capital markets, it's just big investors who are either I need to make this much money or I'm not investing. And they raised that amount of money when interest rates went up, and the projects can't pay them that amount of money, so we're stalled. So to me, this is a chance for the public to step in and say, we're not going to be subject to your boom bust cycle. We're going to actually stabilize it so that we can move these projects forward. And so I think for the BHA residents, there's a really big win if we can control the timeline and not be stuck.
No, I appreciate that. Thank you. I guess what I'm also trying to understand is this whole idea of LLCs and folks who are building. Can we, within the construct of what we're working on now, be a little bit more careful about who is developing here in the city of Boston, that they aren't outside of the state, sometimes outside of the country, they're buying up space. So how can we, with this fund or potential opportunities, really kind of hone in on some of the things that we've been hearing about in terms of like folks just coming to the city of Boston, building and displacing people? What are some guardrails that we're thinking about?
I mean, that's incredibly important. I would first maybe point to a broader scale effort of our efforts to improve the Article 80 process, which is the process by which we approve construction in Boston, and to ask that question at the very beginning. So now we're here in a context of talking about projects that have already been approved, but I think it's really important that we ask the question at the very beginning when you want to build in Boston, who does this benefit? Provide your statements of beneficial interest, but also who might be disproportionately harmed by this development. So one of the things we proposed in our Article 80 action plan that came out last week is to require a displacement analysis at the very beginning, and for the developer to identify if there are a plan for mitigating any displacement, for example. So I think the most important place to put that lens on it is at the very beginning for every and all construction project. And then as we are thinking about the investment, again, really, there's a reason why we're starting with the public-private partnerships we have with Kenzie and the team at BHA, because we already know the teams, we already know who is going to benefit. But as we look to expand that program, I think we should take this lens to it.
And if go ahead. If I can just add to that, so for instance, at both Mary Ellen and Charlestown, we have a bunch of agreements in place related to getting residents employed on these jobs. We're actually, I'm hoping to have more to say on this in the next few months, but we've been working on a pilot to think about how we use the construction projects to support more of our childcare providers at BHA, family childcares. So that's the type of stuff that I think we can do in our sites that is harder for the general.
Right, and so I guess because my time is going to run up and I want to make sure that I get some things in here. But I'm not anti-development, so just for the record and those who are paying attention, get that out of your head, because it's not the case. But what I am concerned about is how we go about doing it and the unintended consequences, right? Because there's an intent and then there's the impact. And I think that these are the conversations that we need to have now, especially if we really are serious about restoring trust in government, because we don't trust the process. The process has never really been set up in ways that we win. And so I think as we continue to have these conversations, we have to really start honing in on what we can do to prevent things from happening to folks, so that people won't be so adverse to the idea of development. So I'll just wait for my second round so I can finish up my rest of my questions.
Thank you, Council Mejia. Council Flynn, the floor is yours.
Thank you, Mr. Chair. I just wanted to note on the hearing order. Well, before I begin, thank you to the panelists. Tell me about the city of Boston has free cash. Tell me what you mean by free cash. Where is this free cash?
I can say a little bit about that, Councillor. So the state has a process where every spring they certify the amount of cash in the city's reserves, which they consider to be free. And it is a funny term, but that's the term that the state uses, free cash. And what it means is that it's cash that isn't obligated to something else, because we all know you could have cash in your account, but you could owe some bills, and therefore it's not really cash that you can spend. So what the state does is it goes through the city's whole audited financials and it says, okay, we understand that you have all these obligations, and then this is the amount in your bank account that isn't obligated to anything. And so in general, the city holds that free cash functionally as a reserve in case of an unexpected bad situation where we needed to spend money. And it's out of the main thing that the city's appropriated out of free cash in recent years has been that $40 million OPEBS top up that we do every year. That's often come out of free cash.
Okay. I just wanted to also note the Boston Residents Job Policy. The enforcement piece of that is the Boston Employment Commission. That's a critical component of the Boston Residents Job Policy. Boston Employment Commission enacted under Mayor Flynn. I listened closely. It costs about $620,000 to build a unit, affordable unit. What is, say for the life of that unit, say 40, 50 years, that's $620,000. How much money is then eventually put in to support that unit, whether it's city, state, or federal, in terms of upgrading the unit, fixing the unit, dealing with renovation of the unit, putting in a new sink, putting in a new toilet, fixing the HVA system? Tell me about that unit. Generally speaking, the $620,000, how much does it eventually cost over a period of 50 years? How much money are we putting into that unit?
Well, so I think it depends on the type of unit, because even though they all cost roughly similar to build, and I should say that the public housing replacement units tend to cost more money to build, both because of our high labor standards and also because we have to do like demolition and such of these very sturdy brick buildings. So it's often a bit higher than that. But so, Councillor, in the case of the BHA ones, the good thing is that we have that federal subsidy. The federal subsidy for public housing has not, as you know, really provided funds for all that ongoing maintenance, but the voucher, the project-based voucher, pays more, and so there'd be a kind of ongoing, it's the rental stream, but it's what you're using for all of that, so that could be quite a lot of money over time. But in the case of these other ones, it's kind of a one and done thing.
The public housing in Boston is the only place where the city puts public dollars into the ongoing cost of housing. We're here today mostly talking about market rate housing, and I'm sure Jim can talk about any housing that he's experienced in a portfolio. But for market rate housing, we're not. The answer is zero, because we don't generally put money into whether upfront capital or ongoing maintenance into market housing. And then for affordable housing, Chief Dillon's probably the best person to answer your question, but I think that the bottom line answer is put substantial capital up front into construction, and then as they're running their numbers and doing their underwriting in Mayor's Office of Housing, they expect no ongoing investment. They expect the rents from the actual development to support the ongoing costs, so no city dollars.
So for this program, the city would be putting in $100 million to support social housing. Is that accurate to say?
It would be investing. The key thing is that the city would get its money back, so it's fundamentally different from our programs where we spend money. So obviously, like the linkage funds, right, that come and go through the neighborhood housing trust and get assigned to projects. Those we spend, what we get is the project, and we don't get the money back. This is replacing the equity fund, so it therefore will come back to the city.
But it is city funds, though, right?
Yes.
Okay. So we would spend $100 million, or are we spending more than that or less than that?
I think, well, today we're not. The mayor announced that she's very interested in pursuing up to $100 million of the city's free cash for this purpose, with a first primary focus on BHA public-private partnerships. We haven't filed an appropriation, or we're not here today asking for a specific amount of money. I don't think it will be greater than $100 million, but that's what we need to explore in the weeks ahead, and then come back for a very specific
And the
number.
city definitely has the $100 million to spend on this program.
I would expect that when we come back, we'd also bring Chief Grafenberger with us, who could speak to what is an appropriate amount to keep in the city's free cash balance. I know the chair spoke a little bit about this from his Ways and Means experience.
So where is that $100 million? Where is it sitting right now?
It'd be sitting in the free cash balance, so which has been certified by the state at a little more than $500 million. And so that means
that's in the city treasury?
it's in the city treasury.
Collecting interest, right?
Yeah, yes, there's a city investment policy which is fairly conservative because the city doesn't want to be in a speculative position and lose its money, but there's a city investment policy managed by the CFO, so the city's money is invested in a number of different accounts and instruments.
Tell me about the loan program.
I know there's a loan program mentioned in the hearing order, but we're not currently proposing, the administration's not proposing a loan program at this time.
Are you giving out grants or financial assistance to potential homeowners through this program also?
No, that wouldn't, I know that there's a number of things that I know the council is willing and eager to explore, but in terms of what the mayor mentioned in her speech last week and what we've been working on closely, working with the state and the BHA, no, we are not currently considering any forms of direct subsidy or any forms of lending. What we're looking at is low-cost equity investment in a market rate development that then, like was previously mentioned, has a return for the city.
Thank you.
Thank you. Councilor Durkin, the floor is yours.
Thank you so much, Chair. So I appreciate the context of the announcement, and it's so exciting. And thank you so much to Administrator Buck and Devin Quirk and Ruben and Jim. Great to see you. I appreciate the context we're in, but it felt like kind of remiss that no one mentioned that the new inclusionary zoning is taking effect today for new filings. And I know when we voted, the city council voted for that new zoning, it was delayed given construction cost, labor cost, inflation, the rise in cost of construction materials. And we know that the interest rates have just come down a little bit, but that developers don't necessarily feel those changes immediately. So I just was curious how confident the administration and how confident the planning department feels in all new filings going through 20% IDP. It's something that I proudly supported, but I'm definitely hearing a lot from the potential Article 80 projects in my district and developers that it feels that that those things that we delayed it for haven't changed too much. So I just want to, on the record, sort of get that answered.
Yeah, happy to take that. Yes, it is October 1st, so all new filings as of today going forward will be subject to the new inclusionary zoning. And I think it's great that we now have in our zoning code, in the law that governs construction in our city, a requirement for inclusionary housing. It's no longer a negotiations for a requirement, but of course the rate that it's at has been subject to a lot of scrutiny. What I think is really important for today's hearing is that we're focused on the more than 20,000 projects that have been approved by the BPDA already, that were approved at a variety of different inclusionary housing percentages, and how to move those projects into construction because they're the closest to starting construction. So those projects, inclusionary zoning was not applied to those projects, nor is it applied to any of the projects that are currently under review at the BPDA because they were filed before today. So we have a significant pipeline of projects that we need to adjudicate and help get into construction before inclusionary zoning takes effect, which gives us plenty of time to continue to consider that rate. But I think what we're really focused on is moving the things that we already approved, but therefore we believe that they are the right projects for our city because we approved them. We would like to get those into construction.
And along that same vein, I've been very passionate about maintaining the sunsetting provision in Article 80. Partially because it gives us the opportunity as a city to continue to have a conversation with everyone who does have an approved project, and see where they are with funding, see where they are with getting their capital stack in order. And I think we need a reason as a city to continue the conversation with developers. And I think obviously this happens a lot in District 8. There are promised transportation improvements, and other improvements that the city is waiting on, and other mitigation that the city is waiting on, that's promised through these projects. And oftentimes that means that project may get to the bottom of bottom of the stack because we've already have a project that is going to provide for that mitigation in communities. So I was just curious if there was any update on the sunsetting provision of Article 80, because I think Councilor Braden's point was really fair about just like the, ghost buildings and other buildings that are there and we're planning for them and we see them in the model room, but they aren't yet, we aren't yet fulfilling those.
Yeah, so yes, there is a sunset clause or a date in the zoning language in Article 80 that says after 2, I believe it's 2 years. I should go fact check that. But I believe is it okay? We'll give you the precise dates, 2 to 3 years. And after that, the BPDA would be within its rights to require the project to go through a notice of project change in order to proceed to a building permit. What we've been doing through the Article 80 improvement process is taking a hard look at dates and timelines in the zoning code and reestablishing metrics that make sense for today's construction and market environment. A little less on the sunset provision, but certainly in the code are timelines for how long it should take the BPDA to conduct its own review. Those timelines are not enforced, mostly because they were created in the 90s with a level of review that is much less high scrutiny than the type of review we do today. So we're going through a process by which we will reform all of those dates and timelines. But yeah, we need a Article 80 approval should not be good forever. It needs to, if you don't move into construction relatively quickly, then we need to have the opportunity to renegotiate it.
Thank you. And I know we're in an incredibly important moment for our city, and I think this Housing Accelerator Fund really is meeting the moment in terms of choosing to invest in housing and choosing to fill those gaps, and appreciated Administrator Bach's point about like this is how we get to the finish line with so many of these projects that we're looking to complete, and affordable housing and is so important in our city. And I appreciated hearing about the Charlestown and South Boston BHA projects. Thank you, Administrator Bach, for all that you do. I think on my end, I'm just trying to figure out sort of how we'll interact with that. So I appreciated the point about, a letter and something that we can approve arriving, because I think it's a big announcement and would love to hear like how the city is meeting the moment on each individual project and how the city council is a part of that. But thank you so much to all of you for being here.
Thank you, Councilor Durkin. I also want to acknowledge and call on Councilor Murphy. Councilor Murphy, the floor is yours.
Thank you, Chair. Thank you all for being here. Just a couple questions. I've been listening in and you've answered a lot of what I was already thinking, but the first one, have we ever invested this much money in a fund where we're just taking, and I never liked the word free, nothing's free, but we have excess money, which I know we talk a lot about here on the council, but investing, what is it, 20% of it into something like this?
To the best of my knowledge, no. I think this is a really unique use of the free cash reserve. Mm-hmm. I think one thing that's important, and Kenzie touched on this earlier, is that if you're going to dip into your free cash reserve, it should be for a one-time purpose, right? Not an ongoing expense. This is very, very explicitly just a one-time investment to address critical market needs and address housing construction in our city today.
Yes, I just want to make it clear, like to the residents, it's not something we normally do. No. That this is, very a bold, and there's always risk. Like, what, if any, risk? Kenzie, you probably have studied this. I know you probably understand, but how long will it take to pay back the city, and what risk is there if that we aren't able to, and how do we hold our own selves accountable? It's like when you spend your own savings and you tell yourself you're going to put it back in, but then you never get around to it. Like, how are we addressing that to make sure that whoever has good answers?
So, I think Ruben can speak to this a little bit more. You spoke earlier just about the double underwriting standard.
Right.
Do you want to?
So we're piggybacking this program off of a newly announced and still sort of we're working out the details, program at the state called the Momentum Fund at Mass Housing. And so we would be utilizing their underwriting. So there are two key pieces to that. First of all, they have $8 billion of loan and equity out in the market right now. They have a really deep understanding of underwriting that we trust. And then the second piece of that is that the projects would also be using a senior debt product through Freddie Mac, and Freddie Mac, of course, has tremendous underwriting. So it's actually a double underwriting piece. So that's the first piece, and the second part is that we would fall in getting our return back. We would be receiving our funds before the developer and before the investors. So we're actually sort of high priority and very, very low risk, which is why we're structuring the program this sort of piggybacking off of the state program.
And if I can answer the question about timeline, so generally with rental projects, part of what this like financing solution takes advantage of is that the cost of other people's money for producing a new construction project is very expensive because everyone's worried about the risk of like, what if there's some accident, things fall down, et cetera. And so therefore what the market's demand is, we want quite a high profit in order to give you our money. But then once you have a residential rental building constructed and occupied, then it's considered a stabilized asset. And then there's like a whole bunch of investors who look for a much lower rate of return, but who want to be safe. Like you think about pension funds, folks like that, and they're like, oh yeah, I'd love to invest in a mixed income, stabilized, occupied building because I sort of know it'll give me this more modest return. So part of what you're doing with the city equity is you're coming in to replace that super expensive equity. But then once you stabilize, you know that you can get taken out by this pool of more kind of like lower cost investors in a stabilized asset. So that's part of the confidence of what you're doing. And I would say that, you know, the other interesting thing for us about this is that right now, like if we go out on the capital markets looking for an equity investor in the mixed income building at Charlestown, we get sort of treated like any market building with inclusionary housing in the country, right? And people are sort of saying, oh, this is this risky of a product. Now we know that it's backed by the city of Boston, that we have a ground lease, that we've got these federal commitments. Like, in fact, it's actually a less risky bet in a funny way than it's being priced by the capital markets. So when you're paying the capital markets, you're like overpaying on the risk side. And so this way we kind of get out from under that extra cost.
And this might be more to the lead sponsor, but the retail space thought ideas of, so a building, would it be a space where it's like one space in a big building and we're going to put, like it's listing, you know, a senior center or some sort of community center? What's the thought there?
Yeah, no, the idea behind the fund was to make sure that our values as a council were incorporated inside of that fund in order to build, you know, the neighborhoods, the developments that we wanted
Not
to see.
just housing, but
Right,
if there's space
right.
to put in, you know, a gym or
Right.
a daycare center.
Absolutely.
Awesome. Okay, no, that's good. And just the wording, because it doesn't say, you know, definitely it's the whereas where it talks about developers would be prioritized. I do have an idea already of how you would be choosing, because it seems there's a list, but it's saying not and, but or, right? They're committed to this. The community mostly supported it. We had the hearing yesterday. I mean, I'm glad it's listing adhering to the jobs policy and all of those things where we know many times we are giving out city contracts and licenses to people we know who have violated that already, but.
So in terms of, so we have more work to do before we come back for our appropriation hearing to answer some of the specifics on how the dollars would be awarded, but I do think we have some concepts that we can share now. One is it's an already approved project, so that means it needs to be compliant with all city policies. Two, to Councilor Fitzgerald's point from earlier, it needs to be ready to start construction. The purpose of this fund is to invest in things that we want to construct now. Three is that they have to need our money. If they don't need our money, we don't want to invest. We want them this is about closing a gap, so there needs to go through the underwriting process that Ruben has talked about. And because this is honestly only time limited, and while $100 million is a lot of city dollars, it's not all that much in terms of like what's going to move the needle on housing in Boston. So this is about catalyzing a jump start to housing construction in our city at a time where we can make a impactful investment and get things moving.
And one last, more like a statement, is the hope that this is successful and that it grows, or is this really just a one-time and we've kind of tried to fix a bigger issue? Are you thinking ahead that this is something we continue to do, and maybe not just in this area, but we're taking money out? Because I know we talk about it a lot through the budget.
I think there's maybe a different perspective between public housing projects and our projects. I think for market rate investment, for market rate investment, I don't think we want to be a long-time player in accelerating housing starts. I think that's about what is happening today and the challenge of producing housing. I don't foresee us continuing this from that perspective, but Kenzie might have more.
Yeah, I mean, I think that we would love to have this be an engine that works and that can keep revolving. You know, and that is what Montgomery's seen. So it's already gotten the money back from its initial deals, and now it's putting them into new deals. And when you think about the fact that, as I mentioned before, we have, you know, almost 20 mixed income buildings permitted between the Mary Ellen McCormick and Bunker Hill sites, like, that's a lot of mixed income housing production that we want to see on, you know, on our land in places where we have like a lot of tenant protections in place, a lot of like, you know, involvement in task forces and stuff. And so I think for us, it would be great to have this be a mechanism that really works and that folks have confidence in. But I think the great thing about it being an investment rather than a subsidy is that the idea is not to have it be successful and then keep coming back to the council for more money. The idea is that that appropriation recycles back, right? And I think obviously the decision when you get that money back about whether it revolves into another housing project or whether it comes back to the city's general fund is a decision for city policymakers to make, you know, but I think that certainly as a housing person, I would love to see it revolve in housing. I think it's safe to say.
Awesome, thank you, Chair.
And I would agree with Administrator Bach. I would love to see it revolve in housing, and this is why I called for the hearing, knowing that the mayor, and I do applaud the administration, the mayor, and everyone who has worked on creating this revolving fund. I applaud you on that work, but I also think that as counselors, I mean, we hear about housing issues on a daily basis. So I think this is an opportunity to advocate to the administration on what type of projects we will be investing in. And, you know, to that point, I kind of want to get an idea of the logistics of how this does work. You know, is it a one-time appropriation into a revenue or a revolving fund? Is it, you know, one-offs to each project that we're going to be doing? How do you envision, you know, the logistics of standing this up, and how many times would you be coming back to the councilors, and for what? Is it just the appropriation, or is it also for the revenue fund?
So I think that like a little bit want to reserve the details for when we actually file the appropriation order, but I think what it's safe to say is that you don't want it to be project by project because of this kind of but-for aspect where you're trying to negotiate down to the absolute minimum that the city needs to invest in order to get the projects to go. So the problem is like once the council appropriates $10 million to this project, good luck getting the number down, right, in a negotiation. So because of that, and the other thing is that just in terms of like technically, as you know, counselor, with your real estate background, like these real estate financings, like they all come together in a moment of closing, and there's lots of things that can like kind of move, like the basis points can move between when you think you're going to have the deal and when it actually closes. So what we're definitely going to want is appropriation into a fund that holds the money, and then that fund does transfers into those financial closings of the specific deals. And I think that therefore what's going to be important for the conversation with the council is about really setting the parameters of that fund so that even though you don't know it's going to be down to this amount to this project, you sort of know what it is that it's going to fund.
Awesome. And then, Devin, you spoke about, you know, a loan versus low cost equity investment. And just for the public, can you just explain the difference between the two?
Yeah, absolutely. So, I mean, importantly, So a project, when it assembles its capital stack, there are investors that put in a loan that you pay back on an annual basis with an interest rate. So, and they have probably a foreclosure position on the asset. The housing itself is mortgaged against that loan, so that if you don't perform, the bank that is making that loan can take that property back. And that's the basis on which they make their investment. That, depending on, and Jim can probably speak to this better than anyone, but depending on where you are in the market, you might expect anything from 70% of the total capital cost to be debt in the form of a loan, to maybe upwards or downwards to like 50%. What we're talking about is investing in equity, which is cash you put into the construction of the project, and then when the project is sold or refinanced.
Wait, so you're saying the loan isn't
the loan?
It's not cash, or
the bank puts in cash to fund the project and gets paid back generally on a monthly basis.
Right.
The equity investor does not get paid back until the property sells or refinances. So that's the type of investment we're suggesting that we make, rather than a payment to the city every month.
Right.
Rather, when the project refinances or sells, that's when the city gets its investment back.
And it's probably worth saying that part of the reason why we're looking at having it be an equity fund instead of a loan is because most like banks and lenders will have a maximum loan to value ratio where they say, I'll lend you money, but no matter who else you go to, you can't have more than X percent, whether it's 50 or 60 or 70%, like based on loans, because of course they're worried that if you go get 100% of your money from different lenders that you're going to default, like you'll pay Peter and steal and not pay back them. So that's the problem, is that I think one of the things that both we and the state looked into was this question of like, could we structure like whatever we put in as a loan? Because of course the nice predictability of that is that you're not riding any of the riskiness of an equity investment. But the problem is everyone said, well, it doesn't help me because I can't, if you give me that money, the bank's just going to reduce the amount that they loan to me because there's an absolute maximum on how much can be loans.
And maybe another important point to make is how much investment we're talking about here. So a single bank might perform the entire debt piece of a project, and say we have a $100 million project. 60% of it is debt, so they're going to make a $60 million loan, and they're going to create the interest rate on that loan, which are very high today and hopefully coming down. On the equity side, it's a smaller total amount, and then our portion of that equity stack would be, and first, Mass Housing is going to be able to go up to 25% of the equity in the deal, and then we might go on with another 5% on top of it. So we're talking about in that same $100 million project, the city's portion of which we're trying to fund is maybe up to $5 million. That means, if we were trying to make lending investments to bring down the costs of debt, we'd have to make a $60 million loan to the project and take out that relatively large high-cost debt. On the equity side, it's easier for us to make a smaller investment and have a larger impact on the overall project financing.
Awesome. And Administrator Bach, I know that the BHA does have some scattered site projects. I know you talked about 15 sites that you are exploring. How many of those are, and scattered sites is like the home ownership opportunities. How many of those home ownership opportunities are in these 15 sites?
Oh, sorry. So let me distinguish between. So there's just the 15 that I was mentioning is actually, and I think it's a little more than that, is between just the Bunker Hill project and the Mary Ellen project, how many mixed income buildings that we already have approved on those two sites. So that's different from the scattered sites. You're right, Councilor, of course, that the BHA does have some scattered sites, and we've been working on investing ARPA in some home ownership opportunities there, and it might be a good thing to come back and have another conversation on, because there's a long update on that. But it's something we're excited about, because The scattered sites are mixed into the community, and a lot of them are good home ownership opportunities. And the flip side is they're actually quite difficult to maintain as a public housing portfolio because you don't have a centralized management or maintenance office. So that's something that we're working on, and really grateful for the ARPA support from the city. Then there's also, like, in the category of sort of BHA development interests, right, there's these 3,000 Faircloth units, and we've been looking at sites that we control, that other public actors control, and that private folks control, where we could site these additional deeply affordable units. And while we imagine that some of those would be in 100% affordable buildings, again, as I mentioned before, sometimes you want to do a senior, like elderly disabled building, something, a supportive housing building, something that has a bunch of amenities that are targeted at the population. We're also hoping that some of those will turn out to be mixed income developments, where there's like a tranche of Faircloth units, and then there's units at different incomes. And an all affordable but mixed example of that is that the plan for the West End Library is that we would have, I think it's 35 or 36 like Faircloth units in a 114 unit building with different levels of AMI mixed in.
No, and I asked the question knowing that the BHA does own some home ownership opportunities. Just wanted to know if, if that was the intention of any of these projects going in the future.
So I think the challenge is that our BHA home ownership, like the home ownership production aspect of our home ownership activities, is a subsidy program, by which I mean, like, we know that we're going to be producing these units and selling them to first-time home buyers at an ultimate like financial loss, right? And that's fine because it's a public interest to get these families rooted in, like Councilor Mejia mentioned, close the racial wealth gap. But it's, I think, key for us to keep those things where we're just spending money on something that we think is a good housing purpose, separate from an investment that we expect to return. And since it's a net spend, we wouldn't expect to return any investment in those like affordable homeownership cases.
Got it. And I guess for Jim, for you, it's are we able to create affordable home ownership with what you've heard today in terms of the city being an equity partner inside of a rental home ownership model?
Definitely. So, our modeling and then verified by a third-party modeling company did prove that out in our test case with that 100 unit. In multiple, so every scenario that you laid out here, Councilor, we modeled each one of those. They do come with those logistical challenges of how do you make all of that work, but none of them would sink the project. It's a completely viable concept.
Got it. And Donald Alexis, who's a developer here in the city of Boston, he was supposed to be in attendance, but he couldn't move things around. But he also has one of the, I think, few couple developments here in the city of Boston where there's rental and home ownership. And he's going to be writing a letter just to speak to how he made it work and the importance of the financing towards that. But how can you talk to me about how does the rental market, because we heard investing in condos can be risky, but when you're having a rental portion of it and then the for sale side, how's that less risk or more risk to the developer?
It is in our business, in the development business, it's all fractional.
Okay.
And so what I mean by that is you look at risk as 100%. So in that 100 unit project, if you were doing 100 for sale, it would carry that 100% of risk that Kenzie laid out. But by the way, I'm incredibly grateful as a resident to have you as our administrator. You are like the smartest person in this business ever. So I just wanted to say that on the record. It's fantastic to be a part of. But by creating just 25% of that, you've now said to the capital markets, we've de-risked this from that perspective. And to Kenzie's point about timing is a huge part of that risk. You've now said that 75% of this project can deal with those risks from a timing perspective, and you've limited to a pool of buyers, which is much more available, right? Because we know the depth of people who want these AMI restricted apartments, and so I think it's a great de-risking factor along with the investment.
Awesome. Yep.
Councilor, can I say just one thing, and not to complicate the situation, but to complicate it a little bit? I think that we've got some great proposed projects in Boston that are a mix of rental and home ownership. So one of them, I think parcel 12C was mentioned, and that's actually a project where we've got, again, a tranche of Faircloth units along with other rental units, along with the home ownership ones.
On public land, too.
On public land, really exciting.
Right.
There's also one, a similar proposal up at Mission Park. The Roxbury tenants of Harvard have this building that's on their former snow lot that's, I think, fully approved. It got approved while I was still a counselor. I don't know if it's under construction. It's definitely not finished yet. I don't know if it's begun the construction yet. But again, it's a stack of rental and home ownership. The thing I would flag, and it doesn't mean that it can't happen, but it's just before you imagine that it can happen in every building, is that the flip side. So I agree that it does de-risk, like if a smaller proportion is home ownership, the whole building's not subject to those risks of like the for sale moment in time. The flip side is the rental investors can be a little nervous about sharing a building with condo owners. The reason is because condo associations don't always invest the amount that they need in replacement reserves. And so if you're in a big building and you share systems, you're going to need to know that the condo owners are going to be good for the portion. And if I'm the rental owner, I'm like, gee, I don't want to be in a situation where 100% of the HVAC system needs replacing 20 years from now, and I only own 75% of the building, but I end up covering more than 75% of the cost because my condo owners haven't put enough into their replacement reserves because they're trying to not spend as much money.
Right.
So it does change the perception of the rental investors. So I just say that to say, I think that there are situations, like I think, for instance, that the Roxbury tenants of Harvard and also ACDC in Chinatown are both like entities in they're place-based entities with remarkably strong reputations, and the sense that like they can navigate some of the like complexities of making sure that like everyone is holding up their end of the bargain is strong. I don't think that like every potential ownership structure would have that level of investor confidence in a mixed model. So I want to say that, not to say that it can't be done, but just to like flag that it does depend a little bit on who the entity is.
Yep.
Can I add to that a little bit as well? So in conversations with Mass Housing and trying to understand the details of the Momentum Fund, the Momentum Fund is structured as a takeout loan, which is after construction. So because of that, it can't actually support condos. So if we want to piggyback and support this effort through the Momentum Fund and allow us to do the underwriting through the Momentum Fund, that is a challenge. That doesn't mean there aren't other ways to utilize Mass Housing in through other programs, but specifically if we're piggybacking off of the Momentum Fund and providing additional supports on top of that, it's been made pretty clear to me that they're not going to be in position to support home ownership, unfortunately, through that particular program. Doesn't mean that takes all the other ideas off the table, just that idea, that direction, we wouldn't be able to follow.
Right. But does Mass Housing in other sources of funding support condos?
There are other programs. We haven't navigated and explored how we would pair this with other programs. We've been really focused on the Momentum Fund as a new idea that the state has come up with, that we are excited to see how we can support development through that.
Massachusetts, again, one of the only states, and the city of Boston, one of the only cities in the United States of America that is funding affordable home ownership, and that's putting substantial affordable housing grant subsidy dollars into home ownership creation. So I think as administration, we are 100%, 150% behind affordable home ownership creation. I think we have more work to do to determine if this equity investment model for market rate housing could support home ownership. But that doesn't mean that, and it seems like, at least if we're following the Mass Housing model, the answer is likely no, but it doesn't mean we don't want to support home ownership through other mechanisms.
Yeah, and I agree, and I know we did a lot of dialogue along with your team, on the equity side, especially institutional investment, and that's why I believe the logistics of this will be a little more challenging on the bigger size of the project, because pension funds have a requirement for rental and home ownership. So, to your point in your opening statement, Councilor, around each project is unique. That's where policy has to be thoughtful around that, and so the larger the project, the logistics become far more challenging than the smaller the project. And I think what it'll help everyone do is narrow the focus of where this will more likely work than where it'll be probably more challenging. And I think your team's breakdown of that classification of below 25 units and then 25 to 99 and then 99 above is a great way to look at it from that perspective.
Awesome. Councilor Louis Jen, the floor is yours. And sorry, I took a little bit more liberty.
No one noticed. No, it's fine. Actually, I want to thank you and a lot of my colleagues who asked really great questions, and a lot of my questions were answered, particularly by Devin. Because when I look at this fund, and I think it's exciting, both the mayor's proposal and Councilor what you're offering, I think about also how, you know, it's I think as Administrator Box said, it's the but for, it's the last mile. And I think about how many projects then will we be able to actually fund via this model? Like, what is that last mile for a lot of developers? Is it 5 million? Is it 10 million? Is it like the number? And especially if we're not at this point, and I understand it's premature to say this is how much we need for the BHA project in Charlestown, this is how much we need for the BHA project in South Boston. That's sort of where a lot of my mind is like, what is the actual scale and impact, given like, I don't know if developers and development isn't getting off the ground right now for $5 million to $10 million, that, you know, that equity stake that you were talking about. Exactly. And so like, and then it makes me understand even more why you want to start off with our own portfolio. But yeah, so that's sort of where I hope the work will come, and the better understanding for us, you know, and a better understanding of the free cash that's actually permissible without taking on too much risk for us to be using here with this model. So that's just my final thought. I don't, if there are any reactions to what I just said, I just want to thank you all for being here and for the perspectives that you offer.
Yeah, thank you, Councilor. And I just wanted to say that I think for us, so we see if this model works, like potential to use it on the BHA side, both at Charlestown and at Mary Ellen. But I think what we're going to focus on is really like the numbers for that building at Charlestown, because that's the one that's like sitting ready to be built now, whereas for at Mary Ellen, we're just finishing up the closing around an all affordable building. So I think like our focus first is going to be on doing this in that Charlestown, it's called Building F, and getting to that number, because I think we all want to know, to your point, like how much, you know, does our project and our projects, because of the public taking a more significant ownership stake there, the dollar number may be higher, but then we get more out of that. And so I think we all want to figure out how to balance that between the different buckets. I will just say that when Devin gave the example of 5 million, he was imagining a scenario in which mass housing was in for 15. So it would be a project where the gap that was being closed by equity was actually a $20 million gap, but it's just that we wouldn't be the first one of those.
Exactly. And this is just a great opportunity to make sure we level set on expectations. I think our expectation at the moment is that as we pursue this program, that we are, for all the reasons that Kenzie has said throughout this hearing, very confident that it's going to work for these really incredible and I think nation-leading public-private partnerships that the BHA is leading forward to create both new public housing and market rate housing on their property. So that might be it, but we're also going to look at the opportunity to invest alongside the state's programs, and rather than hard dollars, it's probably better to talk in percentages. The Momentum Fund probably would go up to 25% of the equity in the deal, and I can't imagine that our program would go more than 5%.
5%,
It's
yeah.
a sort of like ballpark. We got to work out those details, but that's sort of like where our head is at the moment in terms of how far our dollars will actually go.
Yeah, and I guess like I'm excited about this. I guess it's just like when we're talking about the numbers, even though it's premature, I think it might also, to call it a but for, I don't know if that's going to actually be. I don't know.
It has to be. It has to be. There's no reason for us to invest in private market housing if it isn't but for.
Yeah, and so I'm really glad that mass housing is involved, because they actually have the expertise, and I think it's like will be the but for in partnership with other but fors.
Yes, exactly. But they should go first, right? They already have a fund for this.
Just because I don't think that like $100 million, it's a lot of money, but when you're looking at the scale of what we want to do, it doesn't feel like it's substantial in a sense of being a but-for a number of developments.
Yeah, exactly. We're there are hundreds of units in the BHA portfolio that we could support through this, and maybe several hundred more that we can support with $100 million. It's not going to move the 20,000 units that are approved but not in construction. It's going to move a portion of those. And I don't think we should set our expectations that our dollars are going to move all 20,000 of those units, but it gets the wheel turning, and that helps with moving those other projects eventually.
And just to add one thing, just to your point, Councillor, I think if people wonder, like why weren't we here on this 6 months ago or 12 months ago?
No, I understand the
It's
reason. I
because
understand the market conditions.
interest plus the state approving the momentum fund. I mean, without those things, the city, to your point, just didn't have the ability. We would have done one private project and with this, and then gone home, like maybe two. Like that doesn't really get us to the scale of impact that we want.
Yeah, thank you. Thank you. I look forward and I'm excited about what's possible here in connection with our partners. So thank you, Chair, for holding this here.
Thank you. Councilor Braden?
Thank you. Thank you all. This is very exciting. I think one question, and I have to dash out the door in a sec. In terms of the lag time of the investment, like, you put the money in as the building is being constructed, and then it has to be completed and a certificate of occupancy and then rented out. Is it a 2 or 3 year, 4 year cycle?
Yeah, it's usually like the fastest would be 3 years, but 5 to 7 is kind of more standard. There are some people who kind of maybe hold as long as 10, but that's not as standard. So it's kind of in that 5 to 7 ballpark.
And I know the Montgomery County, because we had the hearing earlier on about the social housing funding revolving fund. Montgomery County, they seem to hold on to some of their equity holdings and over the longer term. Do you foresee that happening in this? Like, it's not a bad thing, it's just an option.
Yeah, so I would say this is another place where, and we're probably gonna have to talk more about this when we come back with the appropriation, where there's definitely a distinction between what we would do with the BHA projects and what we would do with just the purely private ones. So like, I would think of this as two different, so mass housing is like, they are gonna do equity financing, but then they're gonna get out of these buildings, right? And they definitely don't want a like long-term ownership stake. Montgomery, actually inherently, all these buildings that they're doing, they're holding at least a 51% ownership stake long term. And so then it raises the question of, well, wait, how are they getting their money back if they're continuing to own the building, right? And the way that they're getting their money back is that basically they're getting a portion of their money back by having other people at a lower interest rate come in. This is this takeout mezzanine financing that we mentioned. And so they're taking advantage of that arbitrage from the very expensive capital to the much cheaper capital. And so they have something called a construction to permanent loan product that just basically lets them pull a bunch out. But it's, you don't get yourself as completely out in their model as you do in the mass housing model. For them, that's a feature, not a bug, because they actually, well, a couple of things, like they want that long-term public control.
Yeah.
And they have made a county policy that if they have 51% control of a building, and most of their buildings they have 100% control, but there's like one that's 87, they're different things, but they've set their policy so that if they have 51% control, these new buildings pay no property tax because they're publicly owned. And what that does is it lets their dollars stretch further because they're not paying property taxes on those buildings, so you have more that's coming back to reinvest in terms of the cash flow on the project. So I think that like, we're very interested in that aspect of the Montgomery model on the BHA project side, but that isn't a kind of place that we would go in these private projects, even though Montgomery is doing that. Montgomery is actually buying the interest, basically, like they're buying the purely private permitted project. They're basically saying to the developer, like, if you want a turnkey development role building this thing, fine, but we're gonna be the owner. That's kind of a bridge further. I think we feel more comfortable experimenting in that space in places where we have public land, a ground lease, a lot of like controls, and we're not kind of just like jumping right into the private world.
Good. I'm sorry I have to go, but thank you all. I look forward to continuing the conversation. Thank you.
Thank you, Councilor Mejia. The floor is yours.
Thank you. I always talk about that I used to be a translator for my mom growing up, and I still feel like very much in this chamber I'm still the translator, but in a different context. Just because I think it's important for us to continue to just try to help people understand everything that's happening. So, for layman's terms and for the sake of the exercise, let's just kind of walk through a scenario. So, I am the head of household with 3 children, and I make $38,000 a year. Help me understand how this particular initiative, right, that we're proposing here will help stabilize my home.
So I think in that situation, at a $38,000 income, probably you're most likely to be served by the new BHA replacement units being produced. And like, although there's certainly a world in which like you could imagine some of these new, like these other new buildings on the private side, if somebody had a voucher, right, that they could use them in these. And that, it is an issue we see, like right now, even our families who have vouchers, vacancy is so low that they can't necessarily find an apartment. So in that sense, they're helped when we get additional housing units, even on the market side, into the market, because it just increases opportunities. But I think the main situation would be that family is, you know, on the public housing or voucher wait list, and that this is increasing housing opportunities for them.
Yeah,
So I think in Kenzie's answer, just to make it really direct, there are three points of entry. That family would qualify for living in the brand new units that are being produced on the public housing side. 2, if this was ended up being used on the private side, there may very likely be an affordable unit which combined with a voucher, because it's a lower income household that probably can't afford just the basic affordable rent, needs the voucher as well, would be able to afford that new unit. So whether it's BHA unit, private unit, or the benefit of us producing more housing writ large in our city helps moderate rent increases and at least helps them not face additional rent pressures over time in the house they're in today.
thank you. And I'm also curious about opportunities for municipal employees. We are going to host a hearing around workforce development housing for municipal employees. You know, we have this mandate that you have to be a resident of the city of Boston in order to work for the city of Boston. And I'm curious what if opportunities exist within this fund to set aside some very specific units or even a building that is set aside for municipal employees. Because from my conversations with the administration is that some of it is because there's some conflicts that we have to just be super mindful of, but I'm just wondering kind of, like for me, I'm always trying to figure out how we fix these problems.
Yeah.
And if we're going to be creating funds and developing opportunities for the city to grow, then I'd like to be able to insert my vision for supporting low-income folks within this vision. So curious about what that potentially could look like.
Yeah, and maybe I'll give you 2 answers. One is a maybe basic answer, and another one that maybe is more innovative that connects to your vision. So on a basic principle, for the broad workforce of Boston, one of the reasons why we're producing affordable and middle-income housing is for that workforce. Those are certainly a target population. There are, as you mentioned, some exceptions to that. If you are an employee who is involved with the administration of this fund or of affordable housing in our city, then you, for state ethics reasons, are not eligible to participate. But that's a very small percentage of our workforce.
Right. None of y'all in that. So I'm talking about folks who in the public works department.
Exactly.
Let's keep it to what we know and what we're talking about are those folks who are making under $50,000 a year.
Exactly.
So that excludes everybody in this room right now.
Yeah.
So those are the folks that I want to uplift.
Yeah, and I think exactly. And so that's one of the key reasons why we have affordable housing requirements and why we need to be investing in housing production in our city is to serve precisely that workforce which the state government represents. But to give you the more innovative, or to lean into your vision here, There are communities in the country investing in sort of worker-specific housing, whether it's, this is restricted teacher housing or restricted nurse housing, for example. I know those models do exist. We don't have a lot of that today in Boston, but it's certainly something we are curious about and eager to find partners who would like to do that with us. I think that's probably earlier in the investment model than what we're talking about today, because today we're talking about approved projects that are ready to start construction. I think to really achieve that vision, that starts way much earlier on with working with a partner, identifying a site, and identifying the workforce that would be housed there, and then building the whole project and all of its permitting and approvals around that vision, which I'd love to do.
Quick question. Yes, I understand that these projects are already kind of lined up, but even within that scope, is there a way to just put maybe 5 units aside for municipal employees? Like, I just feel like I struggle with no, or we can't now. That's further in the, so help me so that I can come to terms with the fact that you can't do it. Like, why can't we set aside some units for municipal employees who make under $50,000 within the construct that you are selling to us?
We can certainly look at it. I'm not aware of a mechanism by which we would do it. So that's why I'm suggesting that we would maybe start earlier with a project that is clearly, that's its mission and focus. I don't know what point of leverage or what point of requirement and what kind of enforcement we would put in place to achieve that with a project that already exists in return for this money, but it's something we could look at.
I think it would make sense to, I don't know, Councilor, if you said that you're having another hearing on this, like, I think also just talking to fair housing. So for instance, I know that there was a whole process, it was a long time ago, and I don't know the details of it, but, to make sure that the artist preference housing that the city does was in line with federal fair housing rules. And I think probably this type of thing would be similarly constrained. Like, you're probably right that there's a way to do it, but also that you'd have to do it in a way where we wouldn't get in trouble with fair housing law. So, but I would guess that the artist preference would be a good model, because obviously that's like something that we've done, and we've done it like consistent with fair housing laws. So that might be an interesting way to think about it. I mean, I think we all know that the tension historically in the conversation about the city explicitly providing housing for municipal workers is that, like, I think for all of us who work in the city and specifically see the contributions of the lower wage city workers and pair it with the residency requirement, I think like there's a lot of people in this room who get the like need for that. I think there's always been external voices that have said, why city workers over somebody who makes the same amount but doesn't work for the city? And we see even when city workers win the affordable housing lotteries, get an IDP unit, that there's sometimes blowback from that, even though they're actually just competing in like with everybody else who earns that income. So I think there's like a political conversation there about like what proportion of units is reasonable for that group. But I don't think you have to sell a lot of people in this room on the value of keeping municipal workers in the city.
Yeah. So I'm always going to go hard for those who have nothing to work with. So, and I will do so unapologetically. But I also am, I don't know, I was your co-sponsor.
Yes.
So I should be overly enthusiastic about this, right? I'm always just concerned about the unintended consequences and not having the right conversations when we're having these opportunities to learn from y'all. And I worry about displacement here in the city of Boston. And I think that the clearer we can get about how we're going to get there and who we're taking along with us on that journey is going to make it easier for the constituents that we represent to understand that this is something that everybody should be uber excited about, that we're not going to get our eviction notices because we're going to be asked to leave the city that we so much love. And I think that the sense of distrust is real. I work here and I don't trust government myself, right? And I know that my colleagues hate when I say that, but the fact of the matter is that we have never really seen the city work for us in ways that make us feel excited about anything, especially when it comes to development. I think that there are folks who are commuting now from Brockton and still working, you know, in the city, and making significant sacrifices because they can't afford to live here. And I think the IDP needs to be increased, right? I know we're talking about the threshold being 20, but if we're gonna have a fund and if we're gonna make it easier for developers to build, then there has to be some compromises that we make to make this city more affordable. And I also think in terms of home ownership, I'd like to see more investments in home ownership as opposed, I mean, rentals are important, yes, because we have to grapple with both, but I'm a homeowner, and unless I skip my mortgage payments, no one's gonna take me out of my home, right? And there's a sense of security that home ownership offers that rentals don't. And I think that going back to closing the racial wealth gap, if that's our intent, is to close it, then I think that we have an opportunity even through this fund to allocate some resources for home ownership opportunities much higher than what we potentially are considering, because I think that will be an easier sell when folks know that they're going to have more affordable home ownership opportunities, and that they're going to be building and being, you know, to stay in the city, not to be gentrified out. I don't know, I said a lot and probably makes absolutely no sense, but somebody out there understands me, and that's all that I care about.
Would you guys like to respond? But if not, like, I just want to piggyback on what Council Mejia has said, is that, you know, development, as I've seen it, you know, through this, being a city councilor, especially on the district level, you know, development kind of determines like who lives, who stays inside of the city of Boston, who's able to create generational wealth, and who's not. You know, and that goes from the size of a unit to how much a unit costs. All that plays a factor into who benefits and who's impacted and what communities are stabilized here in the neighborhood. And you know, what I've constantly heard from developers, and even through this panel as well, is that when it comes to home ownership, right, like the source of the amount of different funding in the infrastructure that's currently set up here in the city of Boston, even in the state, it's not, you know, as much, you know, invested in as rentals, right? And I do believe, right, like we have to start thinking about how do we start turning that around, right? Because, you know, everything I just named prior to generational wealth, stabilize the community, who gets to stay here in the city of Boston, all depend on it. And that's why, you know, I'm a constant advocate and push for home ownership here in the city of Boston. And to Councilor Mejia's point, it's what can we do, right, to influence the market, to influence developers, to continue to build, or to start building more home ownership opportunities. And, you know, the numbers are just evident, right? 24,000 out of the 30,000, right, approved BPDA buildings are apartments. And I believe, I can't remember exactly, but Chief Dillon said only 900, right, are affordable home ownership units, right? And I mean, when we look at the population of you know, who's in certain income brackets and who can afford to buy in the open market, we're just kind of, you know, talking about who gets to live and stay and who is able to create generational wealth. So you made perfect sense to me, and that's what I took from it.
I'm grateful that I'm making some sense here.
I just want to deeply agree with what you both said on the point about homeownership. You're right, we need to do more to create more affordable homeownership opportunities, more pathways to homeownership. There's a lot of work happening in the Mayor's Office of Housing is all about this. I do think it's important for us to take a step back and realize that while there's only 900 units of affordable housing in the pipeline that is home ownership, and that's not enough, that is 900 more than almost every other city in the country. You go to any other city in the country and the number is 0. So we should be proud that we live in a community where we're able to fund homeownership opportunities.
And I'm going to push back on that,
Yeah.
Devin, but you're also talking about what the top 3,
Yeah,
real estate market in the country.
yeah.
Right,
We need
in
to do
terms
more.
of,
We
right,
absolutely
yeah,
need to
so,
do more.
yeah, like not every city has that
Yeah.
title as well, right?
And that gets to what Councilor Mejia said. I think one thing I just want to make sure I reflect back is most Bostonians don't trust the planning and development entity in the city of Boston. They haven't trusted the BRA, they didn't trust the BPDA. And one of the things that the mayor has asked us to do is to change that dynamic. So that's why we've started a planning department. That's why we're changing the zoning code. That's why we're changing the Article E process, because we need a process that works for Bostonians. So there's a lot more to do there. But I just want to agree with the values that you're putting forth.
And just one other note I would just make is, and I say this as somebody who, I'm in favor, as folks know, of like as much money as possible coming into housing. I think that it's important for us to just all be really clear about, in all the things that we're trying to achieve in housing, which things are spends and which things are investments. Because to the point that's been raised about it being innovative for us to like potentially, like the mayor and the council allocate money out of free cash, because it has to be a one-time thing, not support for like an ongoing program where we'd like to spend money on something. I think it's very important also from a trust perspective that what we use that on is a sort of bona fide investment that we can really confidently say we feel good about the fact that it's going to revolve back, because I think that that's going to be important for the residents and taxpayers to see. So I say that because I think there are things that we just need, like we've spent money on as a city and we need to continue to spend money on, and that means like also continuing to chase other sources. It's the reason a lot of us chase the transfer fee, but I just want us to make sure that we distinguish between those two things so that when we talk about an investment fund, we're able to keep our promises about that money coming back.
Right, and I just want to also be clear that, the model that Jim and I wrote was an investment that developers was going to pay back with a slight interest rate on it. I can't remember what the exact interest rate was.
We modeled 3%.
3%, right. So yes, it was a revolving fund where it was an investment into the model that we modeled. I know Councilor Mejia had a follow-up.
Yes. You're Jim?
Yes.
It says James.
Yes.
That is
Officially
Jim?
James.
Okay, I just want to like, who called you Jim? Okay, James. Sorry about that. I was about to correct him for nothing. Sorry. Okay. So I'm following the thread here so that I put a little button on my journey here with you all. So basically, what has happened over the last 11 months here in this council is that we have dismantled the BPDA. Now the city is owning the work, right? And now the city is going to also be a landlord or a funder or like, so the city has now almost, in this moment in time, if I'm hearing you correctly, now the city is also going to be the banker. So you are both the developer, the planner, and the financial institution? Wow.
Yeah, I guess
That's
the
what's
actual
happening?
financial institution would be mass housing most likely.
But
yes,
but
that's-
y'all,
yeah, that's
but you
the
all
vision.
are part of the
part
equation.
absolutely.
Yeah.
We all are.
So that we're all clear,
Yeah.
we've dismantled the BPDA. Now the city owns planning. The city will own financing, right?
In this model, yeah, absolutely. That's the.
And that's y'all.
Yeah.
So the city owns any decision that revolves with the stabilization and the future of low-income people all fall in the hands of the city of Boston. Wow.
All right. No? Okay.
Yeah, no, I think obviously with the caveat that there isn't nearly the amount of money for the city to play that financer role for most projects, right? So the role that we're going to play in terms of being a lender is just for a subset of projects.
And who's the overseer of that?
So that's part of what we've been talking about, is that I think the city is going to invest in this situation with this fund only in projects that we're either piggybacking on the mass housing and other like underwriters and or, you know, these BHA projects that we're looking at, although we think probably mass housing, you know, we would hope would be involved in that too. So the idea is that like it's going to be, and that I think to the point that you or maybe someone else raised, Counselor, you know, projects that are meeting a high standard in terms of inclusionary development. And I think some of the standards that we discussed today with the council as well, like we'll want to come back and talk about like, you know, what are the good job standards and the other like inclusive things. So it's not like, this isn't a all-comers program. The city doesn't have enough money that it can say, hey, anybody who's trying to build a building, come and have a piece of financing from us.
And so this will, I'm sorry, Counselor, I just really want to get clear so that when people ask me questions, I know what to say. So let me give you 2 examples. There's Norfolk Capital. I'm not sure if you're familiar. Patrick Tarjay, he does a lot of development here in the city of Boston. Okay. There's Carlos Castillo. You familiar with Carlos? He's a big person in the real estate space. So very similar to kind of the scenario that I gave of the single head of household, $38,000 a year. For developers of color, kind of like, what is that return on investment? How will they be able to benefit from this? So.
Yeah, absolutely. If it works the way that we are hoping that it does, then Carlos and the other investor you mentioned, if they have projects out there that could benefit from this financing, they're going to get the financing they need to actually get into construction and realize that investment. Right now, if they have developments that are not able to start construction because they can't assemble a financeable capital stack, the purpose of this effort we're pursuing is to close that gap and get those projects into construction so that they and everyone else can realize the benefits of that.
I think for me, I know I'm your co-sponsor and I am happy to help support this journey here, but I think that for me, it would just be really helpful, and I'm going to assume we're going to have a working, like we're going to, or is this?
No, there's going to, well, the administration will also provide a appropriation. I'm not sure if there's going to be an ordinance or a home rule petition to come down to create the revenue. No? Okay, well, appropriation into a fund. And I'm hoping that with that appropriation comes like a framework on, you know, describing on what, you know, values or what type of projects we will be investing in. And that's what we're, you know, having a conversation on now to, you know, advocate for the community. But I'm open to having a working session to kind of flesh that out a little bit more.
Yeah, I think if we really want to build trust, this is the trust building exercise here, right? I think that in order for us to really go ahead and approve any appropriations that come through here, I think that there were still some questions that were, for me, I don't feel satisfied in terms of like, you know, the framework, the return on those investments, who are we impacting, what does racial equity look like within the constructs of what we're talking about here. I think that there's still a lot of things that still need to be flushed out. But what I have seen here over the last 11 months that we've been sitting in these seats is that usually things come through and, you know, things just get approved because that's just the culture and climate that we're in. So y'all probably already got your money lined up and nobody has to worry about a vote, right? But I won't be taking any votes regardless of whether or not I'm the sponsor of this particular hearing order unless I really feel like we're meeting the moment, because otherwise we're just doing this for transactional purposes, and I feel like we have an opportunity to really be thoughtful about those investments and that we have a very clear outline of who is going to benefit and what those benefits are going to look like before we can appropriate. That's just my personal opinion, and yeah, that's my opinion.
And I just want to clarify for the record and Councilman here as well that the administration hasn't presented their plan yet. So we don't have the appropriation or the administration's plan in front of us. So I was being proactive into getting the conversation started before the appropriation came to us so we could start having the conversation now and start fleshing out our framework once the administration presents their plan and the appropriation.
And we're committed to providing providing those details. That's exactly what the next step should be. We agree with you.
And it won't be, well, you're gonna send us a memo and then we're gonna vote on it on Wednesday, and that's like, it's not, I think that for the due process, because one of our colleagues, and I miss him so much so right now, Matt O'Malley, was really big on stickler for the rules and all that good stuff. So if we're gonna be here and do our jobs, then I wanna do my job, and I wanna make sure that we come back into this chamber, flush out whatever framework you're gonna present to us before we go for a vote. I just don't feel like, I personally will not be taking any votes that doesn't feel like we've flushed these things out.
Councilor, this would be a historic investment, and I think we fully expect to have a hearing and to be talking about it again together.
Right.
Y'all heard that, y'all. They're gonna do another hearing.
Awesome. We'll now go to public testimony. When your name is called, please come down to one of the two podiums and state your name, neighborhood, and organization affiliation. Please speak into the microphone, and please keep your comments to 2 minutes. We'll go to virtual world. Hillary, the floor is yours. Hillary, can you hear us?
Yes, I can. Can you hear me?
Yes, the floor is yours.
Thank you so much for holding this hearing and for this proposal. The conversation has been really helpful. I think for us, we just want to bring it back to what I think is one of the key points of the proposal that I read from Councillor Worrell and also sponsored by Councillors Mejia and Fernandez-Anderson. And that is, it seems to me that one of the key things here is to incent developers who would otherwise do 100% rental projects to make at least those affordable units home ownership. So using the city's investment and willingness to go that last mile to enable the developer to make money and the investors to make money off this development, what we get in return is that just those affordable units, which would otherwise also be necessary under IDP, maybe we bump those up some, but we ensure that they meet the needs of the BIPOC, low and moderate income home buyers who are graduating from our classes in droves. So just for a few numbers, Maha graduated 2,000 first-time homebuyers last year out of a total nonprofit graduation of 5,600. So we've got 5,600 people, and we had 95 affordable homeownership units come online. The percentage of affordable units has remained very low, and this seems to be a proposal to try to bump that up. You know, as Councillor Mejia noted, and we know all of you know, we're becoming a city of very affluent folks and lower income renters. The people who are graduating from our classes have been working really hard. They've done what they needed to do. They're doing a little bit better, and they're leaving. Used to be for Brockton. Now Brockton is less affordable. They're going to Attleboro, Pawtucket, New Bedford, Fall River, and Taunton. And that, I think, is not only a huge loss for them, for those who wanted to stay, and they're juggling long commutes with childcare and everything else you need to do, but it's also a loss for our neighborhoods. So I'm really encouraged by this proposal. I've learned something about development processes this morning, more than I knew before, but I do want to highlight that there's a desperate need for affordable homeownership. And yes, we are doing more than most places, but I don't think we should be complacent with that. I think we need to push the feds and the state government to do more, but at the same time use our cash that we have in Boston and our leverage, which it seems like we have a bit, to make these projects go, we should be able to get something in return, and that return could be, hey, you've got to do some affordable homeownership. We're lessening the risk because 75% is still rental. And also remember, if the market dips, the market rate might be $800,000 for these units, and we're selling them at $200 or $250. So it's less risky to come out with an affordable homeownership unit, especially if it's balanced in this type of proposal. So I'm looking forward very much to continuing to learn more about this, to work with the council, the administration, and private stakeholders to make sure that we're using this cash to invest in the type of housing that our people really want and need. Thank you.
Thank you, Hillary, and thank you for all the work that you do around housing and all the work that Maha does. I appreciate it. And 5,600 first-time new home buyers. It's a large demand. I know we have 900, but this kind of just speaks to the demand that's out here in the city of Boston. So I just want to thank the panel for being here today and all your work. I want to thank central staff, all my council colleagues. Big shout out to Matt and Jim for diving into the details, and look forward to working with the administration on this. And this hearing will remain in committee, and we'll be having a working session soon to hammer out the details on what the council envisions the framework or parameters to be around this fund and our goals. But with that said, this hearing on docket number 1002 is adjourned.